Okay, tutorial part 1, things to know. Now, remember, even if you don't completely understand everything here, as long as you follow all the steps in the next video, tutorial part 2, step by step, everything will work out. So if by any chance you don't completely understand everything now, once you learn all the steps and you just follow the steps, even if you know nothing, just follow the steps, you'll eventually, everything that you didn't learn in this video will start to make sense. But of course, the goal is that after this video, you learn everything that I teach in it. So, do your best and try to learn it all. And if something doesn't make sense, then don't worry, it will after you complete the next video and actually start doing it. Now, if of course by the end of this video there's anything you don't understand, first try to watch that part again, try to think deeper, maybe do a little research, whatever. Try to figure it out, But if you still can't figure it out, if you have any questions, you can always reach out. The steps to reaching out will be in the description of this video, okay? So the first thing we're going to talk about is going to be, before we even talk about anything, guys, please don't skip anything, okay? So the first thing I want to talk about is you don't need a laptop to do this. All you need is a phone and Wi-Fi. That's it. Now, some people think it might be better, they might be better off with a laptop, but all they need is a phone though. That's not true. You're better off with just a phone, no laptop, nothing else, right? Remember, I want you to be able to take these trades no matter where you are, and it's much easier to do all of that on your phone than on your computer. So all you need is a phone, not a laptop, okay? Next thing is, you do not need to do any analysis yourself. So if I send out a trade, and we're going to take a look into the trades and see what they look like. We're going to talk about all this soon, but when I send out a trade, when I tell you to buy, sell, stop loss, take profit, whatever, when I send out the trade alert, you don't need to do any of the research yourself. You can if you want. It's your choice, but I don't expect people to look at the charts and whatever. That's my job, right? So you guys can do that if you want, but let me make one thing clear. You don't need to do that if you don't want to, okay? And let me make this clear. You do not need any trading knowledge or experience, right? All you need to do is learn how to copy, and that's what we're here for. So this is not rocket science. This is just learn how to copy. It's like when you go to school, right, and you don't study for a test, and now it's time to write the test, but you don't know anything because you didn't study. The teacher goes for a little, I don't know, goes to the bathroom, and you just copy your friend's answers. Do you need to learn much to just copy someone's answers? Not really, right? So it's the same thing here. Okay, now the next thing we're going to talk about is, the only knowledge you're going to need is the one you're going to be learning in this video. And even then, if you don't learn all of it, like I said, you'll still be okay. But it's good to learn and know as much of it as you possibly can, okay? So try to learn it all. First thing we're going to talk about now is what broker should you be using? So, you need to use a broker which has a couple of requirements if you want to make trading not only work, but worth it. Like, what's the point if you make money, but you make, 3% a year? There's no point, right? If you have $100, let's say, and you only make $3 a year, there's no point in doing this. So it's not just about making money, it's about making enough money. And for that, you need to do it properly by not only copying me properly, as I say, but also using the right broker, which gives you the right tools that you need. So there's a lot of options. Now, before I tell you what to look for in a broker, all of that, I'll just tell you what I recommend. So what I recommend is what's in the description of this video. And depending on where you live, I'll have different recommendations. So in the description of this video, maybe you live in the States, maybe you live in Canada. Just read and it'll tell you what platform you can use depending on where you live. Now, if you already have a broker and you want to use it, or you want to use a different broker that's not in the description of this video, that's fine. All it must have, right, is at least 1 to 30 leverage. Okay, this is the most important one. That's what you need. You need 1 to 30 leverage. And the second thing you need are a lot of stocks. So, I send a lot of alerts on stocks. So you also need stocks, right? Not just stocks, but like it's good. Stocks is going to be the most important one. You want to make sure it has all the popular stocks, right? Coca-Cola, Pepsi, everything on the NASDAQ, Dow, and all the big market cap and famous companies, okay? So you want, because a lot of my alerts will be on that. And then it would be nice if it has everything else as well, natural gas, gold, all that. So just make sure it has a lot of assets, not just stocks, but a lot of assets. What if I send out a trade and it's not on your broker? That would be annoying, right? So for that reason, it should have as many things as possible. Number 3, it should be regulated, right? Regulation, okay? And number 4 is, hold on. Number 4 is a bonus. It's not as important because, our win rate is so high and the service is just so perfect that this won't really matter that much, but it's still a nice little cherry on top. Just a cherry on top of the icing for us, but it would be spread and fees, right? The lower the spread and fees, the better, but the most important ones are the first 3, okay? And then, of course, good customer service would be nice in case, yeah, why not, right? So these are the requirements, okay? If you're going to choose a platform, that's not in the description of this video. Okay, we're going to move on. Now, let's see. So when you use a broker, right? Let's just say it doesn't matter what broker you use. You should be able to connect it to either MetaTrader 4 or MetaTrader 5. Okay, so now what is MetaTrader 4 and what is MetaTrader 5 and why do you have to connect it? I'll explain all of that, okay? So basically, regardless of what broker you choose, there's millions, like there's a lot. You can choose any you want, okay? That has these requirements. There's a lot that has all of this here. But once you pick one, some brokers, you can actually just trade on the broker itself, and you can do that if you want, but I'm not going to make a tutorial video on how to use every broker, so that might not be the best idea for you, okay? So this is going to be the broker here, let's just say. I'm going to write down broker, okay? This is the broker called, let's just call it Shehroze, even though that's not a real broker. Let's just say I made my own broker. This is the Shehroze broker, okay? For example. And what you want to do is, if you want to trade on that broker itself, do your thing. But you have to learn how to use it and all of that, right? Or what you can do is you can connect it to like a third party, okay? Third party platform, okay? That's what you can do. And that's an example would be MetaTrader 4, MetaTrader 5, and there's a couple other ones. But MetaTrader 4 and 5 are the most popular. Now, MetaTrader 4 is the old version, MetaTrader 5 is the new version. And let me make one thing clear. Must use MetaTrader 5. Okay? Not 4. And the reason is because MetaTrader 4 is the old version, and if you connect your broker to MetaTrader 4, what's going to happen is you're not going to be able to trade all the stocks that are on that broker. But if you connect the broker to MetaTrader 5, every stock that's on the broker should be on MetaTrader 5. That's why we use MetaTrader 5. I mean, with 4, you won't be able to even copy half my trades, okay? So that's why you must use 5. Now, once you make an account on whatever broker you choose, right? Whatever broker you choose, here, this is not a real broker. I'm just going to delete this. Okay, whatever broker you choose, right? Once you make an account on it, then you log into the broker, and within the broker, you can make multiple accounts, like live accounts, right? You can make live accounts or demo accounts. And these demo accounts and live accounts are going to have the login ID, the login password, and the server ID. You take those 3 pieces of information, and you go to MetaTrader 5, and you log in. That's it. And if you need extra help, and if you can't figure that, if you don't know how to do that on your own, it's very simple, but if you can't do that on your own, then just contact customer service with whatever broker you're in. So remember the 4th thing here, the requirement. This is also a bonus, but it's nice to have good customer service. Most platforms will have good customer service. You should be able to hop on a call with them very easily. So tell them to make you figure this out if you're having any issues. Like, you should not be stuck here, okay? So, yeah. Now, when it comes to MetaTrader 4, right? MetaTrader 5, you need to download this app on your phone. Okay, so you must download MetaTrader 5 on your phone, and once you go to Google, whatever, find a broker, make an account, and then log into the account, and then make a live account within that broker, right? And you connect it to MT5, MetaTrader 5. All you need to do is open up your phone, open up the MetaTrader app, and you can enter, exit trades, do whatever you want. That's where you're going to be copying my trades. And that's what we're going to be using is MetaTrader 5 in the next video, which is the tutorial part 2, step by step. Okay? Okay, cool. So now you guys know the requirements of a broker. You know, and of course, the brokers I would recommend are going to be in the description of this video. My referral links are going to be there. Okay, cool. And you know that you're supposed to use MetaTrader 5. Or the broker itself if you really want, which I would not recommend, but you can. Okay, now we're going to move on to the next thing. Let's see. I wrote a bunch of things down for you guys. Okay, how much money to start off with? So let me explain that to you right now. How much money to start off with? It's really up to you. Of course, the more you start off with, the more money you make. I'm not going to tell you how much to start off with. That's up to you. You know, if you start from 3 to 5K, that would be perfect, I would say, or that would be ideal, because then you can you can take small risks instead of big risks and still make good money. So we'll go back into that question, but first, I want to talk about risk, okay? So let's just say your balance is $1,000. 100,000, let's just say, just to make it easier. This is just an example. You don't need 100,000, but I'm going to do this just for the sake of simplicity. This is your balance, okay? Your balance is $100,000. Let me delete all of this stuff now. And, you know, I'm only going to send like maybe 4 trades a month, maybe 10 in a really good month, maybe more in the future, whatever. But let's just say I send out 5 trades and I win 4 of them, okay? Well, you should have made or lost $5,000 per trade if you risked 5% of your money per trade. So I'll make this simple. You have $100,000 and you decided that on every trade that you take, you want to risk, let's just say 5%. Okay, so this is just an example. I'm not saying you should risk 5%. We'll get into that after, but let's just say you risk 5%. Okay, that means if you win this trade, what's 5% of 100K? That's $5,000. 5% would equal 5,000. So I'll just do 5K. I'll just do 5, 1, 2, 3. There you go, right? 5,000. So if you win a trade, you'll make 5% of your balance, which is 5K. If you lose a trade, you'll lose 5% of your balance, which is 5K, right? Now, you're able to do this. You're able to risk 5% if you want, 10, maybe even 15 per trade, okay? And this is the recommended amount. This is actually the amount I recommend. You can do whatever you want, whatever you feel comfortable with, but this is the most ideal number, okay? It's big, but it's not too big to the point where, you know, if you lose a bunch of trades, you still have a bunch of money to make it all back. Okay, so 5% is the perfect number. So if I send out maybe 5 trades this month and we win 4 of them, right? So out of 5, we only win 4. What that means is, times 5,000 by 4, that's 20,000. So we made 20K. Right? Because we won 4 trades, but we lost 1 trade, so subtract 5K. What's 5,000? Subtract that 1 trade times that 1 trade we lost, 5K. So subtract 5K, and the answer is going to be 15K. So I made 15K. If I sent out 5 trades and we win 4 of them with this much balance, okay? That means you made 15%. So 15K is how much you would have made. Of 100K, and that's your balance, that means you made 15% in a month. That's pretty good. So that's basically the math, okay? Now, this is the recommended amount. I don't blame someone if they risk 10%. That's understandable too. Maybe they want to make more money. That's understandable. Even 10% is, for me, I get it. But it's up to you how much you want to risk. Now, you might be thinking, wait a minute. What if the stock doesn't the amount of money you make, doesn't that matter on how much the stock goes up or down, right? No. So if I buy something, it's not about how much higher it goes necessarily. No, it's about how much leverage I use, and we're going to get into that. I'm sure you don't understand how that works, and that's fine. If you just follow the steps, eventually it'll all make sense. So the next video is going to be the most important. You just follow the steps and it'll all make sense. But I'm still going to explain it to you, and I want you to listen so that you start to understand it all faster. Okay? So basically, let's say I'm looking for a move like this of 4% on Tesla. This is going to be Tesla, okay? I'm looking for a 4% move on Tesla right here, or 4.18, okay? And I'm also risking about the same, okay? 4.18. Perfect. And then on a different stock, let's just say this is going to be Apple. The ticker symbol for Apple is AAPL, Apple stock. Let's just say on this, I want to look to make less, like just 2%. There you go, or 1.9. We'll just go with 2 here. Okay, so look, you see the green here? It says 2% right here. It's very tiny. I'm looking for a small move on Apple. It says 2% right above, right there. If you see it, right there, 2.01%. And then I'm going to risk 2.01 as well. Whatever, close enough. Like, yeah. It doesn't have to be perfect, whatever. Anyways, but here I'm trying to make 4%. Here I'm trying to make 2%. You might be thinking, oh, I would have to put more money into Apple, right? If I want to make 5%. But here's the thing, I have $100,000. If I put all of it into Apple, I can only make 2K, because this would go up 2% and I would only make 2K. So forget about how much money you have. Forget about the idea of putting money into these stocks, because that's not really what we're doing. Okay? What we're doing is we're using leverage. Okay? So for example, forget about the balance. This is just how much you have. Once you lose it all, then you can't trade anymore. That's all this is. So how it works is, let's say we're looking for 2% here and 4% here. And my goal is to make 5% of my balance, which is 5K. So I want to make 5K, right? This is how much I want to make, this number right here. So I would need to use a certain amount of leverage to do that. X. Okay? Same with Tesla, I would need to make a certain amount of leverage. I would need to use a certain amount of leverage, X. So I don't know exactly how much leverage I'm going to have to use to make 5K on Tesla when I buy it and set up my levels, and how much on Apple, but you can assume that I'm going to use less leverage for Tesla than I will for Apple, and I'll explain why. On Apple, I'm looking for a very small move of 2%, so if I want to make a lot of money off of that small move, I need to use more leverage, right? But then on Tesla, I'm looking for, look, this is 2%, this is 4%. So whatever I'm using here, let's just say this number here is, I don't know, 5. I'm using 5 lot sizes, and you don't need to know what that is right now, but let's say I'm using 5 lot sizes worth of leverage on this trade, and with a 2% move, I'll make 5K. Well, if I'm looking for a 4% move here, right, let's just say 4, close enough. 4%, then I would have to use double. Or no, sorry, I would have to use half. So 2.5. 2.5. There you go. Yeah, half. So on a 4% move, I will need 2.5 lot sizes, which means on half of that, since I'm looking for a smaller move, I need to use more leverage. I need to put in more money to make the same amount as I would have with Tesla. I hope that makes sense, the concept. How to do these calculations, all of that is very, very easy. There's a calculator. I just want you guys to understand the concept of what's going on so you're not confused, right? It's helpful, of course, okay? There's a few other things I want to teach you, but I hope you guys understand this concept. Now, of course, even if you don't understand it yet, do your best to understand it as much as you can. Like I said, when you finish all the next video and you just memorize the steps and you start making money, eventually it'll start to make sense. Okay, next thing I want to talk about really quick is, I told you 5% is the perfect number. I already taught you guys 5% is the golden number. Now, if you do 10%, you would want to maybe do 10% or 15% if you maybe have a small balance. Even then, the broker might not actually let you risk that much off of small moves. They might not even give you enough leverage. So even if you do 10 or 15%, you might not actually be able to, depending on the broker that you are with. So don't be surprised. So some of you guys will not be able to risk more than 5% per trade, okay? And for that reason, 5 to 10%. Even 10% will probably work, to be honest, on most of the trades, but yeah. But the point is, that you only want to look to risk 10 or 15% or 20% if you have a very, very small capital. And yeah. Anyways, now moving forward, the next thing we're going to talk about is going to be long and short positions. It's important to understand what these mean. Now, once I finish explaining, if you don't completely understand, then I have a video in the description of this video, and it'll go more in detail, but I'll make this quick. Long and short positions. I'm going to quickly explain it. A long position, right, is going to be when you buy first and then you sell. Simple. When you buy first and then you sell. Well, what happens when you buy first and then you sell in that sequence? You make money if the price goes up, you lose money if the price goes down. And this is what it looks like. This is called a long position, right? Right there. This is just a visual. You don't need to actually know how to find it and all that. This is just a visual. Okay? And then a short position is the opposite. It's when you sell first and then you buy, which means you can make money on the way down. Like that. Okay? And the way it works, the concept, it doesn't matter. You guys don't need to know the concept. If you really want to watch the video in the description of this video, the link will be there in the description of this video, and you guys can learn the concept and all that detailed stuff if you want. But the point is, if you think the price will go up, you can press the long button and buy and enter a long position and bet in favor of the price. If you think the price will go down, you can make money on the way down. That's the main thing, right? And it's as easy as pressing a button. You don't have to do any of the work. And I'll be teaching you guys how to do that on the MetaTrader platform in the next video, of course, with the steps. But you guys need to understand that as traders, we don't care if the price will go up or down. Okay? Okay, cool. The next thing I want to teach you guys is what is a stop loss and a take profit level. A stop loss and a take profit. So let me write this down. Here, hold on a second. Okay, so stop loss and take profit level. That's just the green is the take profit and the stop loss is the red. That's it. And what that means is, let's say I buy over here. Well, if the price goes up, that's great. I'm making money. But if it goes down, I'm losing money. If it keeps going down and hits my stop loss, it'll automatically sell for a loss for me. So I don't have to look at the screen all day and manually sell when it's time to. No, it automatically sells for a loss here for me. And I don't have to worry about losing any more money. And with the take profit, and then if you enter a short position, then of course the stop loss is going to be above where you enter. Okay? And the take profit is the opposite. It's where you automatically sell for a profit. So it's the opposite. And you can set these levels up wherever you want, okay? Okay, cool. Now you guys know what that stuff is. Now I want to talk about a market. Let's see, a market trade versus a limit trade, okay? So whether you want to enter a short position or a long position, there is a market short and long versus a limit short and long. So let me explain market trade slash market trade, right? Which is a market short or long. You guys know what a short and long position is now? Whether you're entering a short or a long, if it's a market trade, that basically means whatever the price is currently is where we are entering. Okay, so look, you can see I'm looking at Bitcoin here. If I say market buy Bitcoin, that means we buy Bitcoin right now at whatever the price is. I'll still tell you what the price is in that trade, but that's just what market means. Okay? So let's just say the price this green line is actually where the price is. It's at $86,000 right over here. If I think it's going to go up, maybe I want to buy right now, which is going to be a market order. Boom, I buy right there. Okay? And I can set this up wherever I want and this up wherever I want. But then what's a limit trade? Well, maybe the price is here, but I think that if it continues to drop and if it hits maybe a certain price, then it's a good time to buy. I'm not saying it will hit it, but I'm saying if it hits it. So maybe this red line I just drew here, maybe I want to buy over here, but the price is not there. Well, what I'll do is, if the price goes up, whatever, I never get to buy. But I can set up a trade so that if the price goes down, it automatically buys here for me without me doing anything. Okay? Not only can I set that up, but I can also set up the stop loss and the take profit before the price even gets there. So this is called a limit trade. Okay? This is going to be a limit buy. If I want to buy when the price goes down over here. Okay? A limit short would be maybe I want to sell short if the price goes up and hits this area. And then you can set that up. Now you can also set up an expiration date, by the way, so that maybe the price needs to go down here for me to buy, but by a certain date. And if it doesn't, then it doesn't matter anymore. If it hits late, then it doesn't buy here for me anymore, or short here if it doesn't hit on time. Right? You can set up an expiration date for that order, for that limit order, okay? So that's what a limit order is. It's basically a plan to enter a trade in the future if the price gets to that level that you want to buy at, to the price that you want to buy at, okay? It's like, yeah, I'll just give you a quick example. It's like there's a house that's worth $200,000 and I don't have time to look at the price every day, and I tell someone, yo, listen, just buy it for me if it hits, I don't know, 100,000. If it drops there, buy it for me. But if it doesn't hit by maybe next year, then even if it hits after, don't buy it. Simple. Versus market trade is we're entering right now. When I sent out the trade is when we're entering. Okay, so now you guys know what all these things are. Awesome. Next, I want to show you what the trade alerts look like now. Okay, because we're going to be using this stuff. I want to show you the service, right? So it says in the Discord group, right? If you're not in it, you can use the Discord group using the link in my bio to join. Link in my description of this video. It says Shehroze Swing Trade Alerts right here. It's a category. Everything is under that. Ignore everything else. That's something else. Just this stuff here. Just this stuff. So under that, it says Get Alert Access here. Well, if you haven't gotten access already, then you can sign up using this link. Introduction video, and then the platforms I recommend, all of that, and then start here. I'm assuming you're already here. If you're watching this video right now, you're watching the first tutorial video, and then this is next. Okay, and then of course the brokers are here again. And then Zoom meeting, yeah, we have a weekly Zoom meeting class every Monday 9 to 10. And then after that, we have main, open, and closed for Forex, stocks, and investments. Now Forex, I'll explain what main, open, and closed means, but for the Forex category right here, you only get like Euro USD, USD CAD, Forex currency trades. For stocks, you will get mostly stocks, but sometimes like 10-15% of the times, a mixture of commodities like gold, silver, indices or futures like the NASDAQ, the S&P, the US 500, the US 30, right? And sometimes crypto, all of that. But mostly stocks. And then you have an investment. It has its own introduction. You can watch the videos there and learn how to operate all this if you want. And this is just like my comments. I just say whatever I feel like saying and just give you guys an update on what's going on, whatever, right? But yeah. And now I'm gonna show you what the alerts look like. So the most important category is gonna be for stocks, right? That's the core, that's the heart of my service basically. So main stock alerts. Here's what the alerts look like. And there's one more thing I have to talk about is actually dollar cost average. I forgot to tell you guys about that. So here's what my alerts look like. We're going to come back to this in a minute. First, let me just explain to you guys what dollar cost average is. Okay? So dollar cost average it's called DCA. You guys can do more research on it and watch like a video if you don't completely understand, but try to understand what this is, okay? Dollar cost average. Okay, cool. That basically means when you don't go all in. I'll give you a simple example. Let's just say this is where the price is right now, right? The green line. And I want to buy because I think it'll go up. But I also think there's a chance that it'll go down here and then go up. I think it might go up now, or it might go down a bit and then go up, right? What I can do is, if I don't know, maybe I have 100, maybe I want to throw in $100, for example. Instead of putting in 100 here, I can put in 100 right now. 50, half of that right now. And the other half I can put in when it goes down to my other level. So if instead of putting in $100 here, I can put in 50 here, and then 50 here, and then my average entry is going to be in the middle. If I put in 50 here and 50 here, this is going to be my average entry in the middle. It's very simple, right? Like, I'll give you an example. Let's say you buy a gold coin from someone, and he sells it to you for $200. Okay, you buy a gold coin for $200. Okay, and now you have one gold coin. Boom. And then you buy another gold coin from someone else the next day for $100. $100. Okay? So you spent $300 to buy 2 gold coins, right? What's 300 divided by 2? Right? So if you divide 300, because that's the total amount of money you spent, divided by 2 because you bought 2 gold coins, right? The answer is going to be 150. So with this much money, with 300 equals 2 gold coins, which means you paid, if you divide these two numbers, right? You paid 150 per C for coin. Okay? So if you buy one gold coin for 200, and then the other for 100, your average price is going to be 150. So that's what I'm trying to say. If you buy Bitcoin and you put in half over here and the other half here, your average entry is going to be in the middle. Okay? And this is something we use sometimes. Okay? But I will let you guys know that we're going to be doing that. Okay? So here, I'll explain it to you now. Now we're going to talk about the alerts. And that dollar cost averaging thing, I'm going to explain how we implement it to this on some occasions. So it says new trade idea. Okay, cool. It says market buy, which is a long position, right? Buy or long, same thing. It's a long position. This is what we're buying. It's the ticker symbol for Amazon. Entry price. Oh, and it's a market buy, by the way. Remember, I taught you what a market is and a limit is? Okay. And I still told you where we got the entry, because what if you see this late and you're like, oh, they bought this like 2 hours ago or 10 hours ago, I missed it. But this is where they bought it at. Let's see if the price is still there or near it. Well, you can use that information to potentially still enter. Maybe we're down on the trade and you get a better entry, right? Or maybe it's still at the same price. Okay, and then it tells you 200, the stop loss price, right? You know what a stop loss is. So once you enter the trade, you punch in the stop loss and you punch in the take profit so that it automatically sells for a loss or a profit if it hits this price. And it tells you that, look, if the stop loss gets hit, we are looking for a 3.24% downside and 3.24% upside. Now, I know a lot of other services will do like a 1-to-6 risk to reward or 1-to-3 or whatever, right? I do 1-to-1. 1-to-1 means if I'm willing to lose $1, I'm willing to make the same amount. I keep it nice and simple, equal. And that's only so that it's easy for you guys to calculate the win rate and there's no confusion. That's the only reason I do that. Okay, so that's what main stock alerts is for, right? And you can see every message is verified and timestamped by the date and time. Same with main forex, right? Same thing here. Okay. Wait, let me just explain one more thing. And then notice how it says, if I go to the bottom, 100% of max position size. That means there's no second entry. It's a one entry trade. So I taught you this dollar cost average thing here. None of this will apply if it says 100%. Okay? But if it says 50%, right here, that means we're not going all in. Same with, not this one. Same with here, and here. This means we're only putting in half of what we want to normally put in. Or whatever leverage you're using, only use half of it. because we're saving the other half in case our second entry, it goes to our second level of entry, okay? So that's what it means. Yeah, very simple stuff. And then if it does hit our second entry, like you'll see it's going to say average entry and all that stuff. Anyways, open positions. Right now we have 0 open positions, meaning we're not in any trades right now. I'm looking for a good one. Closed positions, all of our winners and losers. So green means the check mark, we won a trade. Red means we lost a trade. Yellow means it was even. So we actually made 0.02, but that's too little, so even. Okay? Long means we were buying, and of course short means we were sell shorting, and on main stock alerts it tells you if it's a short or if it's a buy, which is a long. Okay? And then it tells you what it was, the ticker symbol. We shorted coffee, JPM is a stock, Germany 30, right? The Visa, Apple, Pepsi, we have all these trades. And then how much we made /AVG. It should say AVG. If it doesn't here, it means I forgot to put it in. But anyways, /AVG. So if we sold half for 10% and we sold the other half for 20%, what's the average that we sold it for? So half for 10, half for 20. That the middle number is 15. That's the average, right? That's average. So it would say whatever the average is, okay? And then of course it tells you here after that if it was half of our position or our full position. So we obviously make more money on if it's a full position versus if it's half a position, but we also lose more money on the full positions as well, right? So this is the full position and this is of course half, okay? Yeah, and now the track record, you can see I have all my winners and losers here, all of them. In 2025, so far, in 2 months now, almost 2 months, I've already sent out 18 trades and we've won 14 of them. That's really good, 77.77%. Last year, I sent out 46 and did 35, 76%. I'm happy with the win rate, but I do believe I can send out more trades this year. We'll have to see. But anyways, the point is, yeah, that's basically how it works, right? Pretty simple, yeah. And then, of course, you have the same thing for Forex here. And that just about covers everything. Okay, cool. So now, rewatch this whole video if you need to. But the most important thing is that you guys watch, the next video. It's going to be the most important. If you can just memorize all the steps in the next video, if half or 90% of none of this made sense, it's okay. As long as you memorize the steps of the next video and you just do that, you're golden. This is all just for self-information so that you're more confident and knowledgeable about what you're doing. It's good to have a little bit of knowledge and confidence, right? That's all this is. So yeah, I'll see you guys in the next video.